Digitalization is the industrial revolution of our times, and digital markets are changing our lives forever. They do not simply transform our shopping experience, they change the way we chat with friends, work, travel, play, and keep informed. Probably they change the way we think, and some say they are changing our societies and democracies' function. And these developments have not taken place gradually, but in a disruptive way. Competition authorities across the globe have been equally affected by the profound transformation of market functioning due to the digitalization of our economies. The new opportunities brought about by digital providers have not come without challenges.
Indeed, online platforms open new markets and opportunities. For example, enabling trusted transactions between third parties that were impossible in the past. They increase choice and reduce information costs, allowing consumers to better play their part in the competitive game. They also provided services at low or even zero prices and spread information that helped consumers make more informed choices. Increasingly, only a handful of powerful online platforms dominate the digital landscape, and not by accident. The digital economy shows an unprecedented set of specific factors that lead to the so-called tipping effect, meaning that the winner take all of the market or most of it. Some of the key features of digital markets are, first, strong network effects, meaning that as the number of users grows, the value of the platform to user increases. The more of your friends use a specific social media service, the more attractive it becomes to you. As a result, digital platforms enjoy significant scale and scope advantage, the second feature, that can allow them to reach tipping points. Moreover, these platforms operate markets with several interconnected sides. Consumers of content who generate data, suppliers, advertisers, data aggregators, each of which are sensitive to network effects. Ecosystem economy, where firms can leverage their markets power from one market into another. In addition, vertically integrated and conglomerate business models enable digital platforms to act as gatekeepers between downstream firms and their consumers. Of course, there is a reliance on large amounts of user data that can be difficult to replicate and costly to analyze. The growing role of data allowed the emergence of zero-price business models used by 7 of the 10 largest digital companies. This basically means that newcomers cannot compete on price. In view of these structural characteristics, many jurisdictions have introduced ex-ante regulation that apply to a limited set of firms, usually including the largest online platform. This regulation often includes measures to address data-related concerns, for example, obligations to grant competitors access to data sets and ensure data portability and interoperability, or to address the gatekeeper status of some online platforms, with a view to limiting self-preferencing and bundling, for example. However, this video will not discuss the ex-ante regulation, but rather focus on the challenges for competition enforcement and advocacy.
What are the challenges for competition enforcement? This mix of characteristics makes competition enforcement and advocacy in digital markets particularly challenging. As regards competition enforcement, it is enough to highlight some specific elements that add on to the normal complexity of antitrust investigations. Platform competition, the key role played by gatekeepers, network economies, and tipping effects, combined with the tendency of large digital companies to invade new markets, often make the distinction between legitimate competition on the merits and abuse of dominance less obvious. The emergence of data collection and processing is a crucial asset for competition, such as liaising and cooperating with other regulators, such as data and/or telecom regulators or consumer protection agencies, to ensure a holistic, multidisciplinary review. Cartels might become a problem even beyond oligopolistic markets. In particular, algorithms and smart contracts can be used by firms as more sophisticated tools to establish, monitor, and maintain cartels, even in fragmented markets, while detection and investigation have become more difficult for competition authorities. Finally, when it comes to merger control, in ecosystem structures, competition authorities are often confronted with conglomerate effects, which are more complex to examine than horizontal and vertical effects. This couples with the heated debate of the ability of the traditional thresholds for notification based on turnover to capture the relevant transactions in markets characterized by zero-price business models in which the real value lies in the data collection and profiling. In addition to all this, consider that digital markets are dynamic and fast-changing. Competition authorities must speed up the investigation if they want to come to timely and effective decisions. The challenges for competition advocacy. The importance of competition advocacy is paramount in digital markets. For example, policymakers may decide to take action to curb the market power of very powerful digital operators. It is not for the competition authorities to question public policy objectives, but they should support policymakers in identifying measures that do not introduce unjustified or disproportionate competition restrictions. The main risk of over-regulation is chilling innovation. Policymakers should be made aware that certain benefits in the short term may translate into serious harm in the longer term if level playing field is unduly tilted. Again, the life of competition authorities is not easy. First, advocacy often takes place in turbulent conditions in which the business of the incumbents have been heavily disrupted with serious social implications, for example, on employment. This may result in a strong political pressure on competition authorities, which must find the right words to be heard and understood. In addition, fast market developments require swift reactions. The window for effective competition advocacy might be very narrow, and competition authorities must deal with the trade-off between fully informed and timely advice.
What can competition authorities, and particularly the younger and smaller ones, do to face the complexity of digital markets? There are at least 4 initiatives that they can undertake. First, promote competition knowledge and culture. Competition authorities need both internal competence and external support. Internal knowledge can be strengthened by capacity building, but also by hiring digital experts and creating specialized digital units. External support can be enhanced by outreach initiatives that explain the benefits of competition to the business community, the government, or the general public. 2. Engage in cooperation. Interdisciplinary cooperation with other national agencies, privacy, consumer protection, sector regulators can provide complementary perspectives. At the same time, regional and international cooperation with other competition agencies can foster consistency and harmonize their decisions. 3. Strengthen the competition toolkit. In some jurisdictions, amendments in the domestic competition law have been introduced inter alia to try to better capture relevant mergers, to assess market power more accurately, to detect cartels more effectively, or to better collect and manage huge amounts of data points. And 4. Consider performing market studies. Market studies are resource intensive and may take a long time, but are a powerful tool to gain a better understanding of key sectors. If duly conducted, they enable more credible evidence-based advocacy and more informed enforcement. Many market studies on digital topics have already been carried out by advanced competition authorities and are fully available.
To conclude, digital markets have deeply challenged competition law and policy frameworks. Most well-established theories of harm are still fully applicable to digital markets, but there is a growing consensus that at least some parts of the framework should be adjusted. Competition authorities are building expertise and skills to apply traditional principles in a fast-changing and dynamic market. At the same time, new theories of harm are being explored and new tools adopted when necessary. There is still a great deal of work to be done to address competition concerns in digital markets and to ensure that regulatory frameworks are up to the task. International organizations like the OECD remain committed to helping national policymakers and competition authorities in this mission.